Hey guys, and welcome back to the ASX Investor channel. Today we'll be diving back into the story of Sayona Mining. ASX SYA have had a busy past week. They've recently released a PFS for their North American lithium project and just raised significant capital to help them bring their NAL project online and become North America's first local spodumene producer of scale. Today we're welcoming back to the channel Brett Lynch, the CEO and Managing Director of Sayona Mining. We'll unpack the story surrounding the PFS and the capital raise and what this means for the pathway towards production moving forward. Brett, welcome back to the channel, mate.
Great. Thanks to be back again. Thanks for having me.
It's always good to have you back on. I guess the most logical place for us to start, the PFS has come out for NAL. Can you run us through some of those numbers and what you think the key highlights are?
Sure. Look, I think the PFS really highlighted a really solid commercial footing for us to successfully and profitably now restart the NAL operations. The PFS highlighted a billion NPV Australian dollars, 140% IRR, and a payback of just around 2 years. All of that within an extended mine life now of 27 years. So I think that speaks volume for itself in terms of low risk, fast startup, and a project that is near completion. We, on top of all of that, are very confident that we will be in production in Q1 2023, the first and only spodumene producing operation in North America at that time. So that I think really provides I think good reassurance, good confidence that I think the markets and shareholders want at this point in time. And we did all of that, frankly, on some reasonably modest assumptions in terms of plant yields and pricing, which as we move forward to the DFS, we've got good scope, potential upside to further improve on those results. So I think that's the key to the points. I think the other is CapEx. The PFS highlighted $100 million spend. I mean, again, that's very modest in terms of that sort of facility to get into production today. And I mean, it'd be a third the cost if we were doing that at greenfield way, and probably half, if not a third, the timetable. So that I think is an important confirmation from the PFS, and over and above that, as we articulated in the document, we've already been able to successfully pre-order and in fact deliver a significant amount of that plant and equipment as part of the CapEx. So we've avoided, to a large extent, this enormous problems in supply chain that we're seeing in 2022. So all of those things, I think, is really highlighting that we've got a solid foundation to restart profitably the NAL operation. And of course, that's only just one pillar in the Sayona portfolio of assets. We have opportunities post that to then move downstream. That is a phenomenal opportunity in terms of multiples of value-adding potential. And of course, up the north, we are fast-tracking the development and expansion of the resource base at Moblan to create another hub, which will give us, again, opportunity to more than double our downstream production capacity as fast as anyone else could in North America. Altogether, I think it was a pretty good read.
Appreciate the overview with all of that there. Obviously, we referenced a DFS through that discussion. Maybe some investors were potentially anticipating that DFS. Can you talk about why the PFS component of that came through and what investors should look forward to as you move towards that integrated DFS as well?
Yeah, it's a good question. And look, what really triggered us from moving from a DFS to a PFS, because we have been working on this feasibility study for many months now. But earlier in the year, when we announced the upgrade of the resource base at NAL, we pretty much trebled the resource base. And with such a significant increase of resource, it led to also effectively a doubling of the mine life at NAL. Great problems to have, but we needed to think about and seriously the environmental impacts around the tailings. You could imagine the volume of that had gone up at least double. So the existing tailings plan was to effectively, in slurry ponds, have wet tailings. It's very traditional. And we looked at that and thought, with the additional volume now coming out from the extended mine life, we needed to do something better because that footprint would become much more, environmental footprint, much more significant and frankly, more problematic in terms of risks. So we then took a decision back a few months back to change the way in which we were going to manage the tailings, predominantly from a best practice environmental perspective. So we've moved now to adopt a dry stack tailings. What that process involves is actually extracting all the moisture, the free moisture, out of the tailings through filter presses. And that reduces significantly those two goals, which is the footprint for those tailings, as well as the environmental risk management for it. And we think that actually is a great solution. We're very actually proud of that, that we took that decision. We, I think, are demonstrating proactive leadership in managing, our NAL operations to the best environmental technology and standards that we've got available. The issue with it, though, means that there is a significant amount of detailed engineering that needs to be done to size the filter presses, the system, and what needs to be involved in the construction of that now disposal process. That's going to take us now, several months, and until we finish that, we actually can't complete the whole study at a DFS level. So that's what's driven the change. What we did decide also, though, was to keep the market aware and updated on what we could produce on engineering standards as soon as possible. And hence we took that decision to then release the PFS at that level of standard today at the moment, whilst, we'll then update that as we move through the year.
Okay, so that wraps up that component then. So NAL moving towards production in Q1 2023. But I'd love to know, as you know, there's a lot of different irons in the fire. You've mentioned Moblan and the Northern Hub, as well as the other components. What are those other key catalysts that investors should really look forward to?
Yeah, look, I think 2022 is going to be, a great year in terms of, more little steps and more quickly. We have got a number of milestones and initiatives that we're working on. The first, we're now fully funded and a detailed plan to have the NAL operations restarted and profitably come Q1 2023. Great start to building a leading business in spodumene in North America. So that's given us that first step. The second step, of course, is we can move downstream from that point. And we're looking and have been at several options on how we then integrate that NAL spodumene production and refine it locally within Quebec. That work is ongoing, and later in the year, we expect again to be coming out with a feasibility study on what the benefits and the decisions and options are on that next step. But that certainly is a very value accretive step for Sayona shareholders, and it's always been our intention. The other really important next milestone is the Northern Hub. As you know, we acquired a prospect, a deposit called Moblan, about 600 kilometres north of the Abitibi hub. But we intend to build on that base another similar, but even larger scale, higher quality spodumene production asset in that area. We've moved very quickly to complete the first drilling program. We did that over sort of December to February this year. We put out some preliminary results. They look very, very exciting. I was, in fact, up there to see it for myself. And we are going to double down now on fast-tracking the development of Moblan. That deposit in terms of grade, stripping ratio, therefore economics and quality is exceptional. And we as we always do, are going to move at as fast a speed as possible So we're hoping to have the assay results from that first drilling exercise ready and evaluated in June come July. On the back of that, we will be planning a new further drilling program, far larger than the program that we did in the winter, and we should have those results then by that sort of Q3, Q4 in the end of this year. Really, hopefully, to be able to have defined a significant, we're looking to more than double the resource base that it currently is at Moblan, which will then underpin the effectively economics for building another world-scale concentrator plus hydroxide refinery, all there as the first step in Moblan. The other next step behind that on Moblan is, we think we've found the start or the basis of potentially another deposit or seen in that area with this preliminary drilling. We're going to again fast track that with more drilling and firm that out. But that is a really exciting next opportunity if that comes to fruition. So that's 2022, and I think that's going to be challenging, but it's going to be a very exciting and hopefully rewarding next phase of Sayona's growth. Going forward.
There's plenty going on, as always, it seems, with the Sayona story. But of course, to do all of that, you need funds. You've raised capital now, so that's going to help you facilitate moving towards, obviously, the NAL restart. But there's a range of other use of funds. Can you just provide that colour for investors about strategic rationale, use of funds, and the timing of the cap raise with it all?
Yeah, for sure. So, we've just raised $190 million, and that is to predominantly fund through to startup NAL, and that's really important. So as we've got that behind us, and we can really focus on the job at hand of now executing on the refurbishment, construction, and getting into production of NAL. So that is no small step. It's been done, and we're glad that that's now behind us, so as we can actually get back to work. So that was really encouraging, because we also were able to get exceptional support like we've never had from very large international and Australian institutions, new ones to our registry, very large checks, and we're hoping very sticky money, because I think they are all invested for the long term. They can see that, even though the last month was pretty choppy water for everyone, and particularly us. That I think all of us saw through that it was a wave, but we'd get through it, and we're pretty happy with the result that we've got. The use of funds, I think I said about of the 190 million. 100 million will go into the restart, so it's the primary focus. There's also about 30 million that will go into the effectively establishment of the Ortier project, which is very important in terms of getting the blending right for the successful restart at NAL. And then we've also got another $25 million in terms of exploration drilling. Some of that I mentioned about up at Moblan, and then there's working capital alongside that as well. So I think it's a good balance for us to have. We'll use that efficiently, effectively, to make sure this time next year we're hopefully have got delivered on those steps, and NAL will be up and producing free cash flow.
And as we saw, the NPV for the PFS for NAL came in at $1 billion, but obviously there are a number of different components as well to the Sayona offering. How are you piecing it together and really looking at that broader SYA offering?
Yeah, exactly. I think that's the basis to it. The $1 billion just relates to the value of the NAL restart plan. And like I say, once we get to DFS, I think that has got some significant upside on it as well. But that's only one piece, one pillar of the Sayona asset portfolio. We have the opportunity then to go downstream into what could be carbonate production, which is already, the bones of it are already there. that will be multiples in terms of NPV and value compared to what the spodumene part of NAL is. In addition to that, we've got the northern projects, Moblan and creating a northern hub, which ultimately is a mine, a concentrator, and hydroxide plant. And that is in terms of potential profitability and value is even more than the Abitibi hub, because the grades are 50% almost more, stripping ratios are half, and hence that in itself, you don't have to look at what recently Livent paid for Pallinghurst's share in our sort of nearest neighbour, Nemaska. And that will give you some sense of what the potential already the base value is, but what the potential could be for our northern hub. Add all that together, and clearly the 1 billion NPV is a small part of our asset portfolio.
I appreciate the overview. It's been a very busy period for the Sayona story. As you mentioned, there's plenty of upcoming catalysts. So thank you for joining us once again, Brett Lynch. We'll continue to watch Sayona's journey on the pathway to becoming the next North American producer, or the only North American producer of spodumene locally. Thanks for joining us.
Hey, thanks again. Look forward to chatting soon.